Imagine a company that is just not riding the AI wave. It's creating the tsunami. NVIDIA, the chip giant that's powered everything from ChatGPT to self-driving cars. Seen its stock skyrocket over 1,700% in the last 5 years. But with shares now at $174, the question is the hype already baked in, or is it just the beginning of a multi-trillion-dollar AI boom? Welcome to Smart Investing with Philippe. Let's dive in and find out if NVDA is still a screaming buy. Hi everyone, I'm Philippe, CFA charter holder with an MBA and over 20 years in asset management. I've managed billions at firms like Nordea, Fidelity, Credit Suisse. Analyzing stock like NVDA, today I will break down the latest earning, valuation, and future prospects in simple terms, so you can decide if it is time for you to invest or not. First, let's get to know NVDA. Founded in 1993 by Jensen Huang, NVDA started as a graphic chip maker for video game. Think of those stunning visuals in your favorite PC game. That's thanks to the GPU, graphic processing unit. But NVDA don't stop there. They realized GPU are perfect for parallel computing, which is like having thousands of tiny brains working together at once. Fast forward today, NVIDIA is the backbone of artificial intelligence. They chip train massive AI model like the one behind generative AI tool we use daily. From data centers crunching billions of calculations to autonomous vehicle navigating roads, NVIDIA tech is everywhere. They have pivoted from gaming to becoming the pick and shovel provider for the AI gold rush. And get this, in just a decade, they've gone from a niche player to a 4 trillion market cap contender, the biggest company ever in the world. But how did they get there? It all ties to the exploding demand of AI. Now let's zoom out to the industry context. We are in the midst of an AI boom that's projected to add trillions to the global economy. Think about it, AI isn't just sci-fi anymore. It is in your phone's voice assistant, Netflix recommendations, and even medical diagnosis. NVDA dominates because the CUDA software ecosystem make it easy for developers to use the GPU for AI tasks. They hold 80% of the high-end AI chip market. But competition is eating up. AMD is nipping at their heels with cheaper alternatives, while Intel is pushing back with its gaudy chip. Big tech isn't sitting idle either. Google has its TPUs, Amazon has Inferentia, and even Meta is designing custom silicon to reduce reliance on NVDA. This could chip away at margin over time. Geopolitics hides spice as well. US export restrictions on advanced chip to China have hit NVIDIA hard, blocking sales for the top-tier product there. China accounts for a big chunk of global AI demand, and this chip war is a wild card. Sovereign nations are racing to build their own AI infrastructure as well. Jensen Huang himself mentioned several sovereign AI doubling and potential 3 to 4 trillion in infra spend ahead. Yet, with supply chain stretched and raw material like rare earth in play, the semis industry remains very cyclical. Boom like they have busted before. Remember the dot-com crash? NVDA riding high now, but the sector volatility is real. Speaking of highs, let's talk growth drivers. The engines propelling NVDA forwards at the core is the data center segment, which exploded to $41.1 billion in the latest quarter alone, making up 88% of the total revenue. This is where AI lives. Hyperscalers like Microsoft, Google, Amazon are building massive AI factories stocked with NVDA, Blackwell, and upcoming Rubin chips. Gaming is obviously still a solid pillar, though it's mature. Think high and RTX card powering ray trace world in game like Cyberpunk. Automotive AI is another gem, and NVIDIA drive platform is in car from Mercedes to Tesla, enabling self-driving tech. Partnerships are key there. These with cloud giant ensure sticky revenue. Looking ahead, emerging areas like robotics and edge AI, that's mean AI on devices, could add billions. Jensen Huang talk about AI demands remaining strong with no slowdown in sight. Supply chain robustness, despite competition, position them really well, and Don't forget, NVDA mode is the full stack approach, hardware, software, and services that keep customers locked in for a long, long time. If AI spend hits that 3 to 4 trillion mark, NVDA could capture a huge slice of that market. All right, this is number time now, but let's keep it straightforward. I don't want to draw you into all the detail of DCF and PE valuation method that I've used to come to these numbers. But if you like to know how I did it in very detail, please leave me your comment in the comment section. I will send you my full Excel spreadsheet and you will know how a professional is doing valuation on a company. NVDA just reported the Q2 2026 earning, and it's a blockbuster again. Revenue hit 46.7 billion, up 56% year over year, and beating Wall Street 46.06 billion estimate. Earning per share, non-GAAP 105, smashing the 1.02 consensus. The star, again, data center, up 56% to 41.1 billion, fueled by AI demand. Gross margin dipped a bit to 72.7, non-GAAP due to product mix. But that's still insanely high for a tech company. Operating margins are around 64.5%, showing efficient scaling. Guidance is very optimistic. Q3 revenue 54 billion, above the 52.2 billion whisper number, with gross margin ticking up to 73.5%. They returned already 24.3 billion to shareholders in the first half of this year via share buyback and dividends, with another 60 billion being authorized right now. Cash flow is robust, free cash flow at 13.45 billion, funding R&D and expansions. Overall, this paints a picture of a company firing on all cylinders, but with sequential growth slowing to 6%. Some wonder if the AI peak frenzy is easing. Now, of course, the million-dollar question, what's NVDA worth? I ran a discounted cash flow model, or a DCF, basically projecting future cash flow and discounting back to today at 9% raised, accounting for risk. The base case, assuming free cash flow growth 30% next year, and that's very conservative, tapering to 20% by 2030, we get a fair value of $114 per share. That's below the current $174, suggesting overvaluation short term, but over 5 years, the same model says that it could hit $342. Again, it's a base case. For scenario, same scenario, in a bear case, slower, that's mean a growth rate of 20% growth. Today's fair value is more like $78, rising to $235 by 2030. So you see, even if you buy today at $174 and you are in the bear case scenario, you will still make money because the price target, very conservative, is $235. Now, of course, the bull case, which is around 40% growth, tapering, of course, to 20%, the valuation of NVDA today is $156 today. But valuing valuing NVIDIA in 2030, $469 in 5 years. But if you do the weighted probability of 20% for the bear case, 60% for the bear case, base case, and 20% for the bull case, which you should do if you want a probability weighted valuation, the blended fair value is right now $143, implying limited upside in the short term. And I repeat, in the short term. So I would say, because I use very conservative assumption for valuing NVDA, I would say that the fair value today is around $150. But that doesn't count that NVDA, of course, is one of a kind. It's a unique company, but you can't value it with the traditional DCA, DCF cash flow analysis. You have to pay a premium for this type of company. So I would say that the $174 is very, very, very close to what I would think is the very fair value of NVDA, accounting for the premium you should pay for this very unique company in the marketplace. There is none second company to NVDA again. Now let's move to the PE ratio valuation method. And this one is more like the easy to understand for most of you, at 40 times forward earning, which imply some AI premium. It's valued today at $171, very close to $174 that we have. And it's based on an EPS of $4.28 EPS per share. By 2030, with an EPS estimated at $10.44, that's a target price of $418. So again, if we blend with DCF and the PE ratio, that means you need to make an average of the two valuation methods according to the bear case, bull case, and the base case, then you come up with a blended valuation of $143 today, with a potential of $382 in 5 years. That means you're going to double your money in 5 years. You know, from $174, the valuation we get based on a very conservative assumption for NVDA, both using DCF, discounted cash flow model, and the PE model, you come very, very close to 120% upside, or 17% annualized return from this year. Compared to history, PE of NVDA is ballooned from 20 times to over 40 times. Rich but justified if AI delivers. Again, no stock is risk-free. NVDA faces a lot of headwinds. First of all, the competition from AMD and custom chips could erode the 80% dominance of the market. Also, export ban to China. This quarter, they say that they reported zero H20 sales there, and they didn't include anything for expectation on this export to China. And that's, of course, a huge revenue hole, and geopolitics could, of course, worsen a lot more. Or it could do the opposite, and that's a plus on the upside of the valuation of NVDA. The semi industry is cyclical, very, very, very cyclical. It's a demand boom, then bust, like in 2022, crypto crash. Supply chain bottleneck from Taiwan's fab are rare materials availability add a lot of fragility to the supply chain and the model. And hype. With AI everywhere, is the stock price for perfection. Any earning miss could trigger a sharp pullback. Plus, over-reliance on data center. I remind you, NVDA has 88% of its revenue coming from only one business line, which is data center. Means if AI spends slow down, it will hurt really hard NVDA top line and bottom line. So, my verdict, NVIDIA is still the AI king. There is no discussion about it, with massive tailwind from infra spend and innovation. At $174, it's pricey short term. For some point of view, I would say it's fairly value, even though my blended model suggests a 143 fair value price today. But again, the $143 share price today, fair value is without considering the premium you should pay for such a unique company as NVDA. But the 5-year story is compelling. Whether you take the bear case to the bullish case, you always make money, with potential to hit close to $400, which means close to 20% annualized return in the next 5 years. So if you are long-term, which I believe you should be when you invest in NVDA, you shouldn't try to trade in and out the volatility of NVDA. That's a waste of time, unless you are one of the geniuses that can do that. If you are long-term, it's a buy on dips below 150. So I have a lot of NVDA. I bought it, of course, less cheaper than 174. I would never buy at this level, although I think it's a fair price for NVDA. But I will wait dips go below 250 to add to my existing holdings. The key things always with investing in stocks is to diversify. Don't bet the farm investing all your money in NVDA. Put a bit also in AMD, or put a bit in the stocks ETF if you want to be fairly diversified and play the semi sectors. AI is here to stay, that's for sure. That's not a fad, that's not a short-term story, that's not something that is not going to stay. AI is here to stay, and it will develop faster than anyone could ever believe. and NVDA is positioned to win. But don't expect again another 10 times or 20 times like it did over the last 10 years. Don't expect that. But even if you double your money over the last 5 years, that's 20% a year. 20% a year is excellent for investing in stocks. If you found this breakdown very helpful, hit that like button. It really helps the channel. Subscribe for more nonsense stock analysis like this one and drop a comment. Do you hold NVDA or are you waiting for a pullback? Is it still a buy in your book? Thanks for watching. I am Philippe. I will see you in the next one. Stay smart with your investment. And don't forget to subscribe and like this video. Thank you so much.